with us on Market Guru. Joining us today, Porinju Veliyath, MD and Portfolio Manager at Equity Intelligence India. Porinju, good to have you with us. We've seen so much volatility in the last couple of weeks, and that everyone's really trying to figure out how to manage markets at a time like this. How are you viewing some of these developments, the kind of uncertainty that seems to still persist?
Good morning. See, the uncertainties in the market, I don't think it's something new. This has been happening for quite some time. Different parts of the world, different economies in the world, the currency movements. And I am quite sure about one thing. The uncertainties will continue to be there in the coming years. Because the world has turned so dynamic and, people can't really predict what can happen in this economy and the stock markets kind of things. But fortunately, we are lucky to be in India as equity investors. And, because India is a country an economy which can withhold all these, I think, all these kind of issues happening in the world today. We have a lot of strength in the overall weak economic environment in the world. So Indian investors should be, in fact, happy and ready to take advantage of the opportunities emerging in the country.
So that's the sense I want to understand from you. Uncertainty, yes, of course, all part of the nature of markets. But currently, what we're seeing, some of it is also, a fact of vulnerability to the global situation and so forth. Given that, the pace of returns, how is that affected? There was a time when you could still anticipate a set return, from equities as an asset class. Has that become a question mark now? Should people temper their expectations, especially when we're talking about retail?
Yes. See, the best strategy in today's kind of a market in India and globally, I would say, being an Indian investor, stock picking should be the strategy, which I have been always talking, If you remember a year ago, I was on Bloomberg and I was talking about, I was really cautioning people about buying into the FIA fancied stocks and some of the mid caps which had a huge run up because of fancy by some investors and operators. So this was a very big theme in the last 1 year, 2015. They were the stocks which had the maximum damage. And what happened, the small and mid cap companies in general, they had a huge run up again in 2015. Despite market situation, the Nifty and Sensex being remaining flat. Now that has also come to an end. So this is the kind of cycles the market structure going through. And I was again warning investors since last many weeks about the huge run up in small caps and mid caps. And during while a lot of companies which were not deserving that kind of valuation, which were overvalued because of too many people chasing those small companies without looking at the price and without being price sensitive. So that is another era which is also over. So we have to find the new themes. What can happen in 2016 in this kind of an economic environment in India and the kind of uncertainties globally, the commodity prices coming down, and the China slowing down, the currency uncertainties, and during all these things, India has, I'm telling you, a stable economy, a stable domestic market. Our consumption story is still intact. I would say, in short, India growth story continues to be there without any dent. And this kind of small ups and downs in the market, it's nothing new. We have been always going through this and nothing compared to the 2008-9 kind of movement in the market, where Sensex and the Nifty could be going down below 50% in a short period of time. So when you compare with those kind of irrational movements, I would say, now these few hundred points dent in the Nifty, I don't think it's a very big catastrophe for the country. Perhaps it's an opportunity for those who missed the earlier rally in the market. A lot of people are in the sidelines. They felt earlier they missed the rally, started with the Modi government coming in. So this is nothing but an opportunity for those who missed the great Indian equity story earlier.
Okay, so that's as far as the fundamentals are concerned. But Porinju, you're somebody who, as I highlighted earlier as well, saying that you got to have a stock-specific approach out here. Take us also what you believe is happening in the broader market space, because that's where you've got a lot of sharp cuts coming in as we speak right now. A couple of the stocks are actually extremely weak. What do you make of this whole mid-cap broader market sell-off that's taken place in the last couple of weeks?
Yeah, it was, Priyank, it was due for a big correction. I'm telling you, if you see, hundreds of stocks in the last 1 year have gone up. Many of them 5 times, 10 times. I know stocks which have gone up by 30 and 40 times among the small companies without any significant change in the fundamentals. So that kind of a small mid-cap market was bound to correct. That's what I have been telling. And that has been happening now. But during this process, this is not going to bounce back immediately, all the stocks. This will stay for some time. But during this painful period, there will be some good companies and great stocks which also will get affected and will go down by 20-30%. And maybe these stocks are already at a value. And any further decline is a great opportunity to pick them. So that is how investors should look at the market today. Don't get carried away by the globally what's going on and the too much of scary stories about China. And this is nothing new in the last couple of weeks. Nothing new has happened in the world. We have been going through, as a globe, as a world economy, we have been going through some kind of slowdown for the last maybe couple of years' time. As it started with Europe and US and has spread to other places, and China had been a big growth engine for the country, which is a major part of the economy, global economy. So when there is a slowdown, it is natural that fund managers across the globe, they get panic, and all those things is happening today. And don't believe all the scary stories going around. This is the nature of the world. When something bad happens, people will make it 10 times bigger problem. So don't get trapped in those kind of things. Being in India, I'm telling you, there is no better place for the global fund managers to hide than Indian stocks today, Indian equities. We have all the ingredients in place. We have a great leadership today, politically, which was a very, very rare thing in this country. We were suffering because of that. And there are long-term vision, long-term projects and themes happening in our economy. Even though a lot of some opposition journalists, I would call them, they're trying to pull down those things. They're trying to underplay that. And the opposition have been always, they never cooperated with the good things happening in this country. They're always trying to oppose the ruling party or the current government. In spite of all those things, I'm telling you, many great themes and movements, economic movements happening in India, and which will reflect in our companies. They're taking advantage of those emerging opportunities. Some of the smart entrepreneurs will create huge wealth in the coming 5-10 years in India. So investors should focus on those themes and those things, those great entrepreneurs, those listed companies, which can create wealth for you in the coming years. Forget this kind of a bearish, over bearish kind of talk. I am bullish on India. I find I'm not a big economic expert or something like that. I'm not an expert on oil. I'm not an expert on currency. But, with my common sense, I feel Indian equities have a great long way to go, and we will see new Sensex and Nifty without much delay.
Okay, confident comments there, Porinju. Now, staying with that tone itself, you mentioned an interesting bit out here in terms of what kind of steps you've actually seen from the government itself. Something that you've looked at very closely has been the reform in the power sector. You've spoken about this last time as well when we talk about how Uday is somewhat critical for a couple of the utility companies and even for the infra space. Is that something that you still, are you still looking at some value picks in that sector when we talk about the power sector and the mid-cap infra side?
Yes, Priyank. Now this power sector, we had a very, very big problematic power sector for the last couple of decades. The problems were getting accumulated. The banking system has been collapsing because of that. And first time the government, our leadership, the political leadership has taken steps in the right direction with a long-term vision. And you can't see the results in a month or two, or maybe not in 6 months. It will take time because it is not such a simple problem to solve. So not only about power sector, our infrastructure sector, the hugely leveraged companies, we have so many issues within our economy. The prominent one of which is the power and banking related, the NPAs and the kind of projects being stalled and kind of things. And not only they see more than solving problems. What I appreciate about the current government, they are looking at they're taking up new themes and strategies, new growth perspective for the economy. So that will solve the problems automatically. So if you are focusing on the problems, you will never grow. So this is something, as you rightly told, that the Uday has been launched and many other things. Now the startup theme, the latest thing, what the government is trying to give a momentum for those things, the Make in India, the Swachh Bharat, whatnot. A lot of things have been happening like never before in the political history of India. Believe me, it will take time. A lot more things are going to happen. Now the budget is coming up, and all these negative talks in the next few hours, I would say, will turn to positive, to be positive. When I say next few hours, maybe in this week or next maximum, there can be a turnaround in the sentiment for Indian investors. Be ready for that. I am very, very bullish on all these kind of themes. But at the same time, I would like to warn investors. Don't just buy because a stock is in mid cap or small cap. That times are over. You cannot do casual investing in the markets. The market stock investing is so complex and it's a very tough thing, with a long-term perspective. So to identify companies which are going to go bad and identify companies which are going to create wealth for a long-term sustainable basis. So it's not a very easy thing to do. It doesn't look, the current look of these companies could be deceptive. You cannot just go by the current state of affairs in the company or the current annual report, the balance sheet or the profit and loss account of companies. You have to go beyond that, how these companies can create wealth or whether this company is capable of creating wealth for you after 2 years, 3 years and 5 years. Now that kind of a vision is required for individual investors also when you look at companies. So from that perspective, I am very excited about investing in Indian markets. There are a hell lot of opportunities in this country.
Right. Porinju, how much vulnerability do you see to what we're seeing globally, and even from the point of view of the commodity collapse, for example, what we're seeing, for instance, the metal front, concerns about growth and how they're likely to impact, certain sectors of the economy. I just want to get a sense on whether you feel we're insulated to a large extent, or whether you do feel that we could see some amount of pressure on the back of these global developments.
We are not insulated in these things. We are, in fact, benefiting from these things. Please understand, India, with 1.3 billion people, it is a blessing in disguise, the way the prices of commodities, especially the crude oil price, have come down. And we should be very, very happy about that. It is true, as you rightly told, certain pockets of the of the economy, like some companies who are manufacturing these basic metals, or some companies which are producing crude oil. Even we are holding a company called Ceylon Exploration, where the prices have come down dramatically. We can't help it. We are just holding on. It's not that liquid company. So some of those companies could suffer. That is why you have to be very smart in picking stocks at this point of time. Which companies are going to benefit in this scenario where the commodity prices have come down to very, very low levels? Some of them by 50% down, some of them 60, 70% down. So which companies who are using them as raw material and creating wealth? See, 1 month ago, 1.5 months ago, I think November 19th, I had a chat with Priyank earlier, in which I suggested a stock, HPCL. Hindustan Petroleum, it was not a very serious suggestion, but I was telling this stock can go up. It was, I think, something like 760, 770 rupees. Even today, after all this market falling down, the stock is up more than 100 rupees. So what does it mean? A lot of such companies and some couple of other companies also I was mentioning there are better than the price on that day, even Jet Airways. So that's why I told you this is a stock pickers market. And not only India, going forward, the disruptive technologies and the never before like changes happening in the economies and the fundamentals of companies. Stock picking is the only way to survive. You cannot generally buy a market. I'm telling you, why should we bother about the stock market as a stock picker? See, of course, I understand now Bloomberg as a business channel. You have to talk about the market. You have to talk about the technicals. But why should individual investors be much bothered about that?
That's actually a fair point that you've actually made in terms of the way oil prices have cracked and the kind of benefit we actually get. I want to go back to that point that you were making on HPCL, Porinju, because just pull up the 3-month chart as far as the stock is concerned. Remember, these counters have had a fabulous run. 8.5% gain is what we've seen. And as Porinju was saying, somewhere around November mid or so, we actually had a chat with him on the way the OMC pack could really play out. Would you elaborate a little bit as far as this entire OMC basket is concerned, and for HPCL itself, what's going to work in its favor? Why are you still confident that these counters will outperform?
These companies, they are great assets for the country and for the shareholders. The kind of marketing network they have in the prime locations of all the big cities in the country, and they all are working nationally. The huge refineries, and these companies have been always depressed in the past because of the subsidy burden. There was no clarity. Government was doing basically some kind of unethical act, because these companies, when it is shared, the ownership shared with the public or publicly listed company, the major promoter, government cannot dictate terms. Okay, so much money should go from the profits to the subsidies. That was a very unfair, unethical act of a listed company. But okay, I can understand practically that was going on. But today we have come to a situation where these companies are not stressed with the burden of sharing the subsidy. Even if the oil price goes up, say the crude oil goes back to 40, 60 and 80, which could be possible. Even in that case, these companies will do well because of their operational activity, which is highly profitable. The profit is guaranteed for these companies. You buy crude oil, refine it, and sell it to your outlets. You have to make profit. Why should somebody do it with a loss? So that's the basic fundamental of these companies, which leads to the outperformance of them, and they may continue to outperform in the market going forward in India, because it's a huge country with, as I told earlier, our population, our demographic structure. These companies have a very important role to play. And our vehicle traffic is still going up. The automobile companies are still doing well, or I don't know how long will they go like that. But so these companies, their products have got a very, very important role to play in Indian economy going forward. And they have built huge assets for refining assets and the distribution assets, which should create wealth for the shareholders. Now today it is around 25,000 crores or 30,000 crores kind of market caps. I think it is not even a fraction of their real assets, real worth of those companies.
All right. Let's talk about aviation as well, given that that's also seeing the benefits of those low fuel prices. We've seen a massive run-up, but expectations still seem to be high from that pocket of the market. What are your thoughts, Porinju?
I'm not very much further bullish on these airline stocks. Now things are good, but that's the time you have to be careful. I never go by things which is currently looking good, as I told earlier. You should have a vision for the next year and after 2 years and 3 years. It is true, this industry will continue to grow very big in India as a country. And that growth will reflect in their top line and kind of thing. But as far as the operating environment is concerned, there are still uncertainty can come. But they will not go back to their earlier small, very low prices and like penny stocks. So I think one cannot be getting excited also with the current good fundamentals of these companies. There is no 100% clarity going forward for the operating environment for these companies. So I will say one should be careful about something like Indigo when it is 40, 50, 60,000 crores kind of market cap. That is the best thing that is possible. So when the company looks the best, I normally disinvest.
Fair. Is that a similar approach to the pharma pack as well, the mid-cap healthcare segment for you? Because this really has been one of the biggest wealth creators over the last couple of years. Recently, the way some of these mid-cap pharma stocks have been eroding, what do you make of it? Because you're somebody who was recently looking at Biocon in that space as well. So what do you make of this whole US FDA issue on one hand for a couple of these companies and Biocon?
Yeah, what's the price of Biocon today? I'm not aware. This is a stock I have been buying in the recent past.
Okay.
Okay. See, pharmaceutical, again, India was in a big advantageous position. We have structurally a competitive environment for supplying medicines to the world. Our companies have been very highly competitive, and especially when it comes to quality, where China could not overtake India in those kind of perspective. So India has a huge advantage, but again, that was one of the few industries, segments hyped in the stock market. So when a lot of people chase companies, like Sun Pharma and all those kind of companies, Lupin, so it get into some kind of overpriced mode of valuation. So that is reacting normally, and this FDA issues like accidents happening once in a while. for companies in mid and large cap pharmaceutical. So one has to live with that. We can't help it. But overall, I would say, I'm not very bearish on Indian pharmaceutical sector. When you look at the next 3 years and 5 years kind of perspective, our pharma companies are going to create a lot of wealth in general. So again, you have to see the kind of vulnerability to the US FDA issues, which companies are placed and how. So it all depends on that. I'm not an expert on pharmaceutical as an industry.
Okay, so that's as far as the pharma pack is concerned out here as well. You know, the other space that we've discussed in the past as well, Porinju, and which is something that you've closely tracked, is the entire boost that, that a couple of these companies will get on the back of the whole housing for all push that the government was working towards. I remember talking to you about HSIL a couple of months back as well. In this kind of correction that the broader markets are seeing right now, is it once again time to look at some of the winners of the past, like HSIL, which you've been focusing on?
Yes, Priyank. I like that stock, HSIL. We are holding it in our portfolio management. When it came down from, very high levels, came to near 200 levels and 250, now it's around 260, 70. I think it's a reasonably priced company, and it's a leadership company in that segment. And they have got a glass container division that also is turning around and making profitable. So overall, I find this is a very safe stock in today's kind of stock market environment. And more than that, there are many themes emerging which we discussed earlier, Priyank. Now people talk about the defense on the railways and Swachh Bharat or making. So some of those companies were highly fancied, taken up by the small, medium operators or some fancied investors. They had a huge run-up. Those stocks are correcting now. But this correction in those relevant stocks could be an opportunity again. Now I think, the Reliance Infra, they are talking about big defense push for the company. They plan to disinvest many things and make it debt-free. Even the power, I think they may disinvest the power business at some point of time. If those things happen, now at 13,000 crores kind of market cap, Reliance Infra could be a great bet. I'm not really suggesting this stock, but I'm just telling you the new themes emerging and where the stocks had a big run-up and down, now they are correcting 20-30%. That's an opportunity, but very selectively to pick stock. Don't buy a stock just because of the name defense or shipping or anything like that. Be price sensitive, be value sensitive. That's very important in this market. There is no free meals. You just buy any stock and just because it's in a particular sector. That times are over. Only very few promoters are really capable and they are placed well to create long-term sustainable wealth for shareholders. So some of those companies could be ignored. Some of those companies could have given huge correction in this ongoing market weakness. So that is how we can pick stocks.
It's interesting that you're actually talking about the kind of potential that the whole sector really throws up right now, maybe in the power or for that matter for Reliance Infra to a certain extent, defense as well, and how that could shape up. The interesting bit out here is you're somewhere trying to focus on the fact that there could be a new India story as well. That's what we've been trying to get from the market as well, Porinju. A lot of some of your peers as well have been talking about the fact as to how you could possibly see the next generation of stocks out here which could start supporting or which could start outperforming as well. Is that a theme that you're also working with when we talk about the new India stocks, a new India story to look at?
Yes, yes, Priyank. When I say new India, I am looking at a post-Modi, a Modi era happening as of today. It's I'm not giving all the credit to Narendra Modi or BJP. No, I don't have any political leaning, Priyank. See, there is a structural change in the attitude of the government towards long-term development of the country. Here, I'm not giving credits to any political party or I'm not blaming any political party in particular. It was going on in our country. Mostly politicians were looking at short-term aspects of the vote bank. So I think things are changing from that perspective. That when the leadership ignore the small issues happening in the country and focus on the big picture, that is what India requires today. We are still below $2 trillion economy when China has crossed 10 and it's already $11 trillion economy, with slightly maybe 20-30% higher number of people living there. So we are in a very important situation today. The biggest beneficiary in this kind of a structure of our economy compared to our demographics is equity investors, I'm telling you, because we have to build up so much things now. China has built things beyond what is required, beyond the demand So that is why they have to pay a price for that. Nobody can save them. No action of Chinese government can save them from a slow growth. It can come to now people about talking about 6 and 7%, 5 or 6%. I won't be surprised. Using my common sense, I'm telling you, if China grows at only 2 and 3% next year, because they have built up so much capacities and so much infrastructure, mostly taking loans, too much debt. So it's a natural phenomenon that they will slow down, they will have problems, and those problems cannot be solved in 3 months and 6 months. It may take 6 years, who knows, maybe 60 years.
So in that context, then, Porinju, let's talk about the stocks specifically that you're looking at.
I think I already talked about one stock I was looking at, Reliance Infrastructure, because the company I found, of course, that group, Anil Ambani group, was not in favor for the last many years. They had a lot of issues. Still, they have over-leveraged problems across the board. But this company in particular, I think it is well placed to take advantage of the new India. They have moved towards, the defense in a big way. Big way means it is yet to take shape. They have made a subsidiary company like Reliance Defense, and now that's what they are going to focus on. And they are ready to sell the cement and many other businesses, including the power business, and make it debt-free and maybe cash-rich, and those cash can be used for the defense growth. And India can again become a very competitive country to produce and supply maybe defense products globally. That is what our government is trying to do. But you cannot just buy it and forget. See, these new emerging themes, India themes, I would say, you have to buy some, take small exposure, monitor it, and at different stages going forward, you may get more confidence. Okay, the company is in the right direction. The industry environment is going to help this company create wealth. So you have to add stocks further and later at different phases. That is the best way to play these kind of themes, because you don't get anything, you don't get multi-bagger kind of stocks ready-made. It has to evolve over a period of time. So you should have the patience, and sometimes you have to forget certain negatives. You have to ignore negatives, then only you'll get a multi-bagger. You won't get a perfect company, which is, excellent balance sheet and great management and a very good business model, futuristic, and you won't, there are companies like that, but they are already overpriced. Some of them may be priced for the next 5 years. So that is where I used to, differ on some fancied companies earlier. So okay, coming back to stocks, I think, so from that perspective, Reliance Infrastructure looks like a good stock. There is no hurry to buy in this kind of market. You may get it maybe another 5-10% lower, or maybe 20% lower, who knows. Again, the HSIL, which we discussed at 260.70, that's looking like a very safe bet, very conservative company. One thing we have to understand, why India is in a better position today globally. It is because of the conservatism practiced individually in the families and in our community and government as a whole. We were never comfortable, just taking loan and spending money. Maybe some people may be doing it, and we always laugh at them. Generally, our people, Indians, are very conservative. They get some money, they try to buy some gold, some land, some money in the stock market. They are savers, and they are very conservative. They don't take risk. And these families, they won't be taking huge position in the F&O kind of things. People are very conservative in thinking. And that culture of conservatism is holding back India in the big problem happening globally today. So we will have the advantage of that going forward. So this $2 trillion economy is going to grow to 2.5 and $3 trillion economy very soon. And we have to grow. So that is the big picture, which can later go to $5 trillion. And we are dreaming about $10 trillion economy, I don't know. But there is a space to think much higher level, which is not the case of other countries, most other large economies in the world today. So that is why we are telling India is in a sweet spot, and this commodity prices kind of many aspects are in favor of Indian economy and the Indian equity investors. So to take advantage of that, you have to be very sober. You should not get excited about things. Don't get carried away. Don't believe all these scary stories. So be sober and make money. Market is great.
Porinju, only if the Nifty could somewhere hear that, because even as we speak, it's just slipping a little bit, sub 7,400. And we're just once again down by nearly 0.5%. And it's once again looking pretty weak as far as markets are concerned. But as Porinju's been saying, you got to look at opportunity in this kind of correction as well. And talking about that, Porinju, another recent sector that you've been looking at closely has been the whole hospitality bet as well, in terms of the way you've been looking at some picks there. Is that a space that you believe could be, somewhere attached to the new India, to the next growth driver as well? Because we've always seen the hotel side somewhere work in cycles itself is what we've seen. What are your expectations when we talk about that space as far as hotel stocks are concerned? Could that be an avenue to watch out for? And if you've got some bets in that space that you can talk about specifically?
Yes, Priyank. See, hotels have been going through a very bad phase in profitability, in operation environment. The cost of operation was very high for them, and which was never compensated by the room rates. So now that situation is over, and the oversupply also getting over. I think there are more people traveling, more than depending on the foreign tourist. Even internally, domestically, a lot more people are traveling year after year. Not only just Gujaratis, Now Gujaratis have been traveling last many decades. So that is spreading to other states, and I see the families planning, okay, where do we go this vacation? Or where we for this Diwali vacation. So that culture is really emerging, and affordability also have gone up. The number of people who have come to the middle class and upper middle class, those who save money and they enjoy life traveling to some good locations, and the hotel industry has a very big positive on this, and which is reflecting in our airlines business. The number of passengers really going up, and all other modes of transport. And now this will reflect in hospitality business also. And we had a very bad decade earlier. So all these things put together makes it great values. Now Indian hotels, I was recommending this stock some time back. Now it has moved up a bit. But Indian hotels, just see around 160, 80 properties with over 16,000 rooms in this country. And I was telling in one of my interaction, their top property, which is the Taj Palace in Colaba, that property alone is what the market cap of the company. So the prices of this company, of these stocks, have fallen so much or staying depressed, which is only fraction of its real intrinsic value. And these assets of the company, it is the real operational assets of the company which creates revenue and profitability. And now, of course, Indian hotel, there was mismanagement by Tatas. They never thought of shareholder wealth creation. But I think that is changing. They started thinking after a long time for the first time about shareholder value creation. So which can take it long way. It can go to 20, 25, 30,000 crores kind of market capitalization. Similarly, we have well-run well-managed hotels like East India Hotels. And I don't know, some of the very highly trusted companies, I don't know. I heard once I bought some stock called the Royal Orchid. It's a mostly asset-like model of the business. They're managing business, around 35 properties they are managing now. It may go every year by 10, 20 kind of numbers. And it's a very good management, I found. They're very dynamically managing it. I think this company also can create wealth going forward. So hotel industry in general is turning around. There are all symptoms.